Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Cowell E Holdings Inc. Annual Report. Cowell E Holdings Inc. offers a diverse range of businesses and services to various industries. At its core, the company provides design, development, manufacture, and sale of modules and system integration products for smartphones, multimedia tablets, and other mobile devices. This includes camera modules for mobile device manufacturers. In addition to this, Cowell E Holdings also designs, develops, manufactures, and sells optical components used in consumer electronics products. The company's expertise extends to providing technical consultancy services, further solidifying its position as a comprehensive solutions provider. Furthermore, the company engages in trading of camera module and optical products, catering to both domestic and international markets. Its geographical presence spans across key regions such as China, India, Korea, and Vietnam, allowing it to tap into diverse customer bases. Overall, Cowell E Holdings Inc.'s business portfolio encompasses a wide range of services, from product design and development to trading and technical consultancy, making it a significant player in the electronics industry. Cowell E Holdings Inc. market capitalization of $22 billion is significantly larger than the average industry peer of roughly $0 billion. This shows that Cowell E Holdings Inc. holds a significant advantage in their industry. Cowell E Holdings Inc. trades at a higher price-to-earnings ratio of 17 times and a higher price-to-book ratio of 4.82 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 64% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth are multifaceted and varied. One key factor is the significant increase in revenue from the largest customer, which has seen a substantial jump from $2,418,117 in 2024 to $3,454,694 in 2025. Additionally, the growth in Chinese mainland and Hong Kong markets has contributed significantly, with an increase of $1,039,770. The demand for optical functions in mobile terminals is also on the rise, driven by the growing complexity of imaging systems and the increasing requirements for precision, consistency, and reliability of optical components. Furthermore, the company's expansion into emerging scenarios and deepening strategic synergies with partners has led to a surge in revenue growth. Another significant contributor to revenue growth is the transformation of research and development outcomes into multi-terminal forms, which has enabled the company to tap into new markets and increase its customer base. The increased orders from customers, particularly for new rear-end camera modules, have also played a crucial role in driving revenue growth. Overall, these factors have combined to drive significant revenue growth for the company. The net income of a company saw a significant increase of $74.5 million, rising from $120.4 million to $194.9 million. This substantial growth in net income is a positive indicator for the company's financial health. However, despite this increase in net income, profit margins experienced some fluctuations. The gross margin decreased by 1.5%, dropping from 11.7% to 10.2%. This decline suggests that the company may be facing higher production costs or inefficiencies in its manufacturing process. On a more positive note, the operating margin and net margin both saw increases. The operating margin rose by 0.6%, reaching 6.9% from 6.3%. Similarly, the net margin increased by 1.8%, climbing to 5.6% from 4.8%. These improvements in operating and net margins indicate that the company is becoming more efficient in its operations and better at managing costs. Overall, while there were some fluctuations in profit margins, the increase in net income and the growth of operating and net margins are encouraging signs for the company's financial performance. The company is generating positive operating cash flow. This is evident from the increase in operating cash flow from $113,349 in 2024 to $149,439 in 2025. The upward trend suggests that the company's financial health is improving, with a significant increase of $36,090 in just 1 year. The company's debt level has undergone significant changes over the past year. A notable decrease in bank loans is evident, with a substantial drop from $206,483 to $29,573. This reduction in debt not only reflects a more stable financial position, but also indicates a successful effort by the company to manage its liabilities. Furthermore, the interest expenses on bank loans have also seen a considerable decline of approximately 15.5% between 2024 and 2025. This decrease in interest expenses is a direct result of the reduced debt level, allowing the company to save on financial obligations. The overall trend suggests that the company has made significant strides in managing its debt and associated costs, positioning itself for improved financial performance in the future. Management's outlook for the company is optimistic, as they plan to continue investing in research and development. This strategic move aims to solidify the company's core strengths while expanding its capabilities through innovative synergies. By deepening its technology platform, the company seeks to stay ahead of the competition and drive future growth. The company's dividend history reveals a consistent trend of paying out dividends to its shareholders. As per the provided information, the company has indeed paid dividends in recent years. In fact, it has proposed a final dividend of $39,050 for 2025, indicating a significant payout to its investors. This suggests that the company is committed to rewarding its shareholders through regular dividend payments. That concludes the financial summary for Cowell E Holdings Inc. Feel free to comment below, and I will be happy to answer them when possible.